Bernie Sanders was on Joe Rogan a few months ago talking about marginal tax rates, and it looked like the king of enlightened meatheads had no idea how any of it worked.
Start paying their fair share of taxes.
What is their fair share?
I don't know. I mean, under Eisenhower, the very rich paid at their upper levels 90%.
So if you make $1 billion, you pay $900 million.
No.
But the thing is, that's not really uncommon. A lot of people seem to think that if your income crosses into the next tax bracket, then all your preceding income retroactively falls under that new, higher tax bracket, and then you suddenly owe a giant tax bill. And that's simply not true. That's never how it worked. But then again, unless you major in accounting, when are you gonna learn about how all of this stuff works? So we find ourselves in a situation where a lot of Americans have a distorted view of economics, especially when it comes to paying taxes. A view that is harmful to working class people, and I don't think it got this way by accident. South Korean economist Ah Jun-chang described economics as the language of the rulers.
Economics has become a bit like a Catholic theology in medieval Europe. It has basically become the language of the rulers. So if you don't speak economics, you cannot participate in any debate. So increasingly being able to speak economics is important, but then of course they are not going to let you speak it in the exact same way that the Vatican banned the translation of the Bible into local languages in the medieval times. So unless you belong to this priesthood, and once that you create this body of knowledge which is not accessible to other people, then you can basically bully other people into accepting your argument because other people cannot really understand you.
So today we're gonna talk taxes. I'm gonna stick to the basics, try to keep it interesting, and I'll do my best to explain the concepts that you need to know as a working class taxpayer. And the more we know, the more educated we can be when it comes time to elect the bozos that write the tax code. Because believe me when I say, we are getting screwed, but not in the way you think. Hooray! I'm sure you are all excited for this episode. Obviously, nothing that I say in this video should be taken as tax advice. I'm not an accountant, I'm just some dude on the internet. I honestly don't understand how anyone could take what I say and use it when it comes time to pay taxes, but whatever, it couldn't hurt to put this disclaimer up front. Well, anyways, let's start with the basics. About 61% of American taxpayers are W-2 employees who get paid an hourly wage or a salary, while 7% are 1099 employees who are self-employed or independent contractors, while another 7% fall into both categories at the same time, but with the rise of the gig economy, that number is going up. I'm making this video for the roughly 3/4 of all Americans who work for their money, but to understand how income taxes work, we all need to understand it from the perspective of a business owner. So imagine you own a fruit stand that sells $200,000 worth of produce in a given year. Well, you have business-related expenses that go into running that fruit stand, right? You pay rent, you got an electric bill and a water bill to pay, you buy the fruits wholesale from local farmers, and you pay somebody $10 an hour to run the stand for 40 hours a week, and all of those costs together equal $150,000. So when it comes tax time, you show proof of the revenue for that year, then you minus your business expenses, and what's left is the profit. Well, that profit is the taxable income. So these are the tax brackets for 2025. So you would fall right around here. The Joe Rogan School of Accounting says that you would pay 22% of that $50,000, which would be $11,000. But I already told you that that's not true. In reality, you'd pay 10% off that first $11,925, then pay 12% off the next $36,549 that you made, then you would pay 22% on only that last $1,524 that you make. So you do all the math, and that gives you a basic tax bill of $5,913.66, or an 11.8 real tax rate, nearly half as much as you think it would be if you thought the same way Joe Rogan does. This right here is called a progressive tax rate, which means every chunk of money within each bracket gets taxed at that rate, and then the rate goes up as you get more chunks of money. To make it simple, imagine there's two tax brackets, 20% under $1 million of annual income and 90% for $1 million and above. If somebody made exactly $1 million in a given year, that means your taxes only go up from 20% to 90% on that very last dollar you made. A tax increase of a whopping 70 cents. A lot of people out there seem to be afraid to break into the next tax bracket, thinking it will give them a much higher tax bill, but that is simply not the case. There's no situation where if you make a certain amount of money, you actually take home less. That's not how it works. Going back to Bernie Sanders earlier, he mentioned that we had a 90% top marginal tax rate back in the Eisenhower era, which would hit at about $2.5 million if you accounted for inflation. But if we actually implemented that and we do all the math, then a person making exactly $2.5 million would actually be paying $882,019.92, a 35% real tax rate, with a take-home pay of over $1.6 million in a single year. See? It's not that bad. The bottom portion of your income is still taxed at normal rates, and only the highest earners will start paying that 90% tax rate. And that is only after they have already accumulated over $1.5 million in their bank account. So quit your bitch ass crying about this idea. The taxes you make go up gradually and incrementally, so you will always keep a lot of the money you make as you make more money. You would need to make tens of millions of dollars in a single year before you see a noticeable difference in the taxes you pay, but by then you're already making tens of millions of dollars. Stop feeling sorry for rich people. They have plenty of money. Tax the rich. The thing is, we already had a 90% top marginal tax rate between 1944 and 1963, which is also the time in America's history where our economy was just kicking so much ass. The high top marginal tax rate meant that it didn't make any sense to pay company executives millions of dollars, since they'll just lose a lot of that money to taxes once they hit the $2.5 million of annual income in today's money. So instead, they paid their regular employees well and reinvested into the company. It basically acted as a maximum wage, which made life better for the typical working class American. It made it so one income earner can afford a house, and 2 cars, and a comfortable lifestyle, and a vacation once or twice a year. It's why companies were so innovative and we enjoyed so many technological advancements. America didn't just happen to be at its greatest when we had a 90% top marginal rate. I'm arguing that America was at its greatest because we had a 90% top marginal tax rate. So a 90% top marginal tax rate is not just some pie in the sky idea. It is something we did in the past, and it was extremely successful. So a 90% top marginal tax rate will only mean that the highest levels of income are paying somewhere between 30 and 40% of their income. And that's before you account for deductions and credits that lower that tax bill even further. So let's go back to that fruit stand from earlier, that full-time employee, remember that? So that employee is making $10 an hour, working full-time, so 40 hours a week. That means they make $20,800 in that year. And that's pretty fucking depressing when you consider that the minimum wage in many parts of the country is way less than that. The individual tax brackets for an employee are exactly the same as a business's income tax. So if you plug their income into that bracket I showed you earlier, that means the employee will be on the hook for $2,257 or just under 11% of their income. But again, that's before deductions and credits. Remember how that fruit stand took out $150,000 worth of business expenses out of that $200,000 of revenue to arrive at a taxable income of $50,000? That's basically how tax deduction works for an individual earner. And for a paid employee, your gross pay is like your revenue, and you may deduct certain purchases you make throughout the year, many of them are work-related purchases, to lower your taxable income. You are certainly allowed to save the receipts and make a list of all the things you spent money on throughout the year, like work clothes, office supplies, license fees, whatever. And when you take the time and energy to list it all out like that and claim it on your taxes, well then that's called an itemized list of deductions. Businesses can do that too. Businesses often do that because you end up being able to lower your tax bill by quite a bit. But most working class people don't go through all that trouble. They just claim something called a standard deduction and call it a day. The standard deduction amount was around $12,000 to $14,000 in recent years, but this year it has been increased to $15,000. But other costs are deductible outside of work-related costs, like charitable donations or mortgage interest, and either way you do it, taking all those deductions changes the taxable income down to a lower number, and that is the amount that is plugged into the tax bracket to determine the taxes you owe. So imagine there was a $10,000 standard deduction, just to make the math easier to understand, and we use that to calculate the fruit stand employees' taxes. They now calculate their taxes by plugging in $10,800 into the brackets, meaning that after all the math is done, they only owe $1,080, which is down from the over $2,200 that they would have paid without claiming that deduction, which is a savings of over $1,100. So a $10,000 standard deduction nets that worker about $1,100 in tax savings. So here's where the problem is. A $10,000 standard deduction sounds real sexy and exciting, but the real tax savings that a worker nets off of that is a lot less than $10,000. A $10,000 deduction can mean different amount of tax savings from person to person, depending on their income and what tax bracket they fall into. So that's why politicians love to promise deductions, because they can throw around big exciting numbers, but the actual tax savings are a lot less. Even if a person makes $100,000 in a year, a $10,000 deduction only drops their taxable income down to $90,000, which nets them a $2,200 reduction in the taxes they owe. So that means higher income people end up getting more out of the same deduction because the tax rates are just higher up there. So in the end, tax deductions typically favor the rich. A tax credit, on the other hand, reduces the taxes you owe after all the calculations are made. After you figure out your tax bill, you apply the credit to that number and it drops the taxes you pay to a much lower number. Let me show you what that means. So if that fruit stand employee from earlier gets a measly $2,000 tax credit instead of a big sexy $10,000 deduction, it cuts $2,000 off of that bill, which is nearly 10% of their income. So the lesson here is credits are typically better than deductions, especially for lower income people. And there are some credits out there that actually net you extra returns after everything is considered. Imagine you owe $3,500 in taxes and you qualify for $4,000 in credits. You may qualify for $500 to be credited back to you, but it depends on the credits. Some work that way, like the child tax credit, and others, like the solar electricity tax credit, would just drop your tax bill to zero and you don't get any extra money back. So be careful if you try to buy anything to access specific tax credits, because if you don't owe enough money, then you might miss out on some of those tax benefits. Deductions, on the other hand, can only drop your taxable income to zero, but it stops right there. So if you make $100,000 and you qualify for $200,000 of deductions somehow, well, it'll only drop your tax bill to zero. It will never net you any extra returns. Another thing to consider is wealthy people and business owners qualify for way more deductions than regular paid employees do, especially after the 2017 Trump tax bill and the recent Big Beautiful Bill. They can potentially deduct their tax bills down to zero, since they can deduct surgeries, fuel for their private jets, and private school tuition for their kids. Meanwhile, a teacher paying for their classroom supplies out of pocket can only claim up to $300 in a year. And back in 2017, they even tried to take that deduction away from teachers, but then they were defeated by the opposition. So yeah, good for them. Teachers get to continue deducting $300 off their taxable income, which is really like a $60 tax savings over the course of a year, which is better than nothing, I guess. So that whole no tax on tips thing turned out to just be another deduction too, and not a very large deduction at that. That deduction maxes out at $25,000 for qualified tips, but once you make more than $25,000 in a year, that deduction runs out, and you start paying taxes on all your income, including your tipped income. It's just a deduction. It doesn't actually eliminate the taxes paid on tips. So no tax on tips was a giant fucking lie. The no tax on overtime provision is even worse. It's also just another deduction you can take out, but it's only calculated off the half portion of the time and a half overtime pay. And that only applies to a maximum of $12,500 in any year. So if you make $30 an hour as a union tradesperson and you earn 10 hours of overtime every single week for an entire year, then that means you can only deduct $7,800 off your taxes in a given year. So let's look at the math. Your base pay would be $62,400 at $30 an hour, 40 hours a week, plus $23,400 in overtime, time and a half pay. That equals $85,800 in annual income. With the new no tax on overtime rule, you can only deduct $7,800 from your pay, which means you're taxed at a $78,000 income bracket instead of $85,800, which is, not nothing, but it's still way higher than your base pay before the overtime. And you end up with a tax savings of only $1,700 on $23,000 of overtime pay. It's almost as if these freaks get a thrill out of seeing you continue to accept their lies. So a lot of people think that overtime is taxed differently the more you make it. And if you make a lot of overtime in a single pay period, then it goes way, way up. Well, that's not true. You're actually taxed according to the same brackets no matter how you earn it. But people who work a lot of overtime look at their pay stub and see that a lot of money has been taken out of it. I've seen it myself. The only reason it feels like you're getting taxed more is because of something called the tax withholding system. And this is how it works. So by now, you should know how the tax brackets work. Each chunk of income is taxed at a different rate as you go up the brackets. But when you look at your pay stub, the taxes they take out are pretty consistent throughout the year. So that doesn't make sense. How come you're not paying lower taxes at the beginning of the year and higher taxes as you make more income? Well, basically, your employer is guessing how much money they should take out every paycheck so that it's even throughout the year. When you calculate your taxes for the year, there's a specific dollar amount that you owe after you do all the math, right? Your employer's HR department is basically taking your hourly rate or your annual salary, making a guess at what they think you'll end up making at the end of the year, so they can guess what total taxes you'll owe at the end of that year. And then they're dividing that by the number of paychecks you'll get, and that way a consistent amount of money is withheld from your pay, and that's what they send to the IRS. It's basically a service they do to make sure your income isn't fluctuating like crazy throughout the year as you enter new tax brackets. That way, you're not taking out loans at the beginning of the year when your tax rate is 10% and your paycheck's a little bit higher, and then possibly missing payments on that loan later on in the year when your tax rate jumps to possibly 22%. Basically, your HR department is making sure your paycheck doesn't shrink right around Christmas shopping season. And if they didn't do this service at all and they just paid out your entire wage, well, you would have to save thousands of dollars throughout the year just so you can pay your taxes when tax season comes around. This makes sure you don't blow all your money betting on cockfights over the dark web, then finding yourself unable to pay your tax bill when Arturito doesn't make it past the semifinals. But the thing is, your HR doesn't really know how many deductions or credits you may qualify for at the end of the year, so they're taking a pretty wild guess. So that's why sometimes they take out too much money, and after you apply all your deductions and credits, the IRS returns some of that money back to you. That's why it's called a tax return. It's your money being returned to you. Other times, they don't take out enough, so you end up owing money at the end of the year. But that situation is not entirely out of your control. There's an option with your employer where you can choose the tax withholding, and you basically pick an arbitrary number. If you choose 0, that means you want them to take out the maximum amount that you would owe if you take no deductions or credits. If you pick a bigger number, that means you plan to claim more deductions and credits, and they should take out less money from each check in anticipation of that. And that's, the basic rule a lot of people already know. You choose 0 for a smaller paycheck but a bigger tax return, or you choose a bigger number for a larger paycheck but a smaller tax return at the end of the year. Maybe you'll have a small tax bill. Well, that's how it used to work prior to 2020. But starting in 2020 though, that old pick a number withholding system went away, and now you have to struggle through this new W-4 form where you need to make a bunch of calculations to figure out exactly how much money they should withhold from your paycheck. So what is the exact amount of deductions and credits and tax savings you will qualify for at the end of the year? Who the fuck knows? You don't know. Your employer certainly doesn't know. So everyone just fucking takes a wild ass guess. The tax code changes every year. Your income changes every year. It's a crapshoot. So if you're the type of person that ends up owing taxes every year, well, that just means you didn't do a good job on your government mandated math homework, and you should try again. Honestly, it's probably a good idea to redo this every couple of years, especially if you buy a house or have a kid or have some other major life-changing event and you shouldn't owe anything anymore. Maybe. It's not really a guarantee. And that's because certain things can make it more difficult to guess what you'll owe at the end of the year. So if you work hourly and your schedule changes from week to week, then your employer is constantly changing their calculation throughout the year. And if you work a lot of overtime, well, then that calculation moves it upward, sometimes by a lot. So if you work a lot of overtime in a single pay period, then that can change the calculation upward by quite a bit. It might even push you into the next tax bracket. So that's why it feels like you're paying more taxes if you work a lot of overtime in a single pay period. You don't actually pay a different tax rate on that overtime income. They're just withholding more of your money out of your paycheck to prepare for the potential upward shift in your income. Your income tax is based off of those same brackets no matter how you make it. Base pay, overtime, doesn't matter. They're just withholding more because that overtime pay is basically a surprise to them as far as their calculations are concerned. The same thing can happen to a salary worker who gets a promotion in the middle of the year. They anticipated you would make this much money, but the promotion changes that calculation to that much money. So now they need to increase that taxes that they withhold from your paycheck to account for that change happening sometime in the middle of the year. So state income taxes basically work the same way, but with different brackets and different deductions or credits depending on where you live, but in the end it's pretty much the same thing. But income tax isn't the only thing taken out of your pay stub. Payroll tax is something that you don't really hear people complain about, not nearly as much as income tax, which is weird because the system is way more fucked up and politicians have screwed you way harder with the payroll tax system than they did with the income tax system. Payroll tax is how we fund Social Security, Medicare, and the unemployment system. Employees and employers share an approximate 12% tax based on your income, usually split 50-50. For most people, 6% of your income goes to this tax on top of your income tax, while your employer pays the other 6%. For them, it lowers their income tax bill since it's a business expense, but for you, it's just an extra tax that you pay on top of your income tax. And you can't really do much to reduce that or apply any credits or deductions to actually lower that payroll tax. Don't get me wrong though, I'm not saying this tax is bad. Social Security is a good thing, but the way it's applied is a giant pile of horseshit. First of all, it's a regressive tax, which means wealthy people pay less tax the more money they make. This tax is capped at $176,100 per year. So the moment you make $176,101, then that tax goes away. This is fucked up. That means that a person making $350,000 a year only pays 3% of their income towards Social Security, and somebody making $700,000 a year only pays 1.5% of their income towards Social Security. An optometrist making $176,000 a year contributes the exact same amount of money towards Social Security in a single year as a multimillionaire. So that also means a lot of multimillionaires stop paying into the Social Security system several days into January, sometimes several hours into January. This payroll tax cap is one of the many reasons why income inequality is such a bad thing. $1 billion earned by 10,000 different people generates $60 million for Social Security. But if a single person makes $1 billion in a single year, then it only adds $10,000 to the fund. This means the mere existence of rich people hurts our Social Security system. So when you hear a smug idiot telling you that Social Security is a Ponzi scheme or it's gonna run out so we need to cut services or raise the retirement age, that is a lie. Rich people barely pay into it. That's why it's underfunded. And it gets worse. Self-employed people pay twice as much of their income towards Social Security as a normal wage earner does, about 12% of their annual income, since they're technically both the employer and the employee at the same time. And that is why there's this recent push for gig economy type jobs, and big corporations are also pushing their employees into independent contractor type statuses, since it lets them off the hook for certain employee benefits, healthcare coverage, and most importantly, payroll taxes. So these apps aren't selling you economic freedom or a side hustle, they're passing off the payroll taxes that they should be paying onto you. Self-employed people are punished with a tax increase simply for being self-employed. It's one thing for a person to choose to be self-employed and understand that they pay that extra tax and doing it willingly, and it's another thing entirely for corporations to push people into that life against their will without telling them that, hey, this is a tax increase for you and a tax cut for themselves. And that's not it. There's an entire class of rich people who don't pay any of the taxes that I mentioned so far. Capital gains tax is something you may never pay in your entire life, unless you sell a house or something. And we all know home ownership is rapidly becoming a thing of the past. You pay this tax every time you sell a piece of art for profit, or when you sell stocks for profit, or collect dividends off your shares. You know, rich people shit. This tax is kinda similar to income tax. It has brackets that go up as you get more money in the space of a year, but the key difference is it's money that you don't get from working. It's taxed based off the money that comes in from already having money and owning things. You know, rich people shit. So this right here are those capital gains tax brackets, and you might have already noticed something. While you do pay taxes on all short-term capital gains, that's for gains made on assets bought and sold in the same year, long-term capital gains don't really kick in until after $47,000. That means a rich person can make $47,000 and not pay a single dollar in taxes. Rich fuckfaces who received a trust fund from their racist grandma get a tax benefit simply for being born rich. On top of that, they don't pay payroll tax either. Not at all, since they aren't an employee or an employer. Working people pay payroll tax, self-employed working people pay twice as much payroll tax, and rich people who don't work at all do not pay a single dollar into Social Security. And on top of all of that, after that first $47,000 that's tax-free, they only pay 15% tax up to $500,000, and they barely pay 20% tax on anything made after $500,000. This is what you should be angry about. To put that in perspective, the wealthiest CEO in America makes $100 million, and the wealthiest actors and athletes makes less than that in a single year. They all work for their money. They all pay income tax, and they all pay into Social Security, although they could be paying more. But billionaires, they don't pay jack shit. They don't pay income tax, they don't pay into Social Security, and they barely pay any capital gains tax. When you compare the brackets, there isn't a single point where a working person pays less taxes than some rich idiot who never worked a single day in their life. A person who gets up in the morning, commutes through rush hour traffic, clocks in at work, deals with customers, answers phone calls and emails, and gets shit from their dumbass boss about making deadlines and manages to earn $47,000 in a year, pays 6% payroll tax, then pays another 10% income tax for the first 12 grand they make, then 12% income tax for every dollar they make after that. But some rich dipshit who wakes up on a yacht every single day pays zero taxes on their first $47,000. None. Nothing at all. And worse yet, the working person only has access to a handful of deductions to lower their taxable income and a few credits to lower their tax bill a little bit further. And it usually adds up to a couple $1,000s, if any. But the rich person has access to several more deductions and credits to the point that they can somehow pull in hundreds of millions of dollars and end up only paying less than 5% of that income on taxes. Some of them even manage to pay zero taxes. And they accomplish this by all kinds of different scams. And who made it this way? The politicians that many of you voted for. The ones who promised you lower taxes. They lowered taxes all right. It just wasn't your taxes that they were lowering. For the people who actually work for a living, they may have cut 1 or 2 percentage points off your income tax rate over the decades, but they took away credits and deductions and helped corporations cut your pay and raise prices so high that when all things are considered, you're paying way, way more compared to years past. All this extra money you pay is basically another tax that you pay directly to these wealthy dipshits who don't even pay taxes themselves, and they don't work at all. They get a giant tax break simply because they were born into a giant pile of cash. Then they use that money to buy up billions of dollars worth of corporate shares, and these corporations underpay and overcharge us working people for everything we need to survive just to maximize profits and stuff their pockets with even more money. I try my best not to point out one side over the other, but on the topic of taxes, it is solely the fault of the Republican Party going back to Ronald Reagan and even further back before that. They've cut the top marginal tax rates by a lot. They've cut corporate tax rates, which I didn't even talk about. They've eliminated many deductions and credits that you can access to lower your tax bill, and they're destroying Social Security, Medicare, and other social safety nets paid for by you. I need you to understand that Social Security isn't some nebulous taxpayer-funded program. It is paid for by working-class people exclusively. It's your money. It's basically our own collective bank account that rich people do not pay into, and they're taking it away from you. Democrats have historically been funded by the wealthy and corporations to sit on their hands and step aside while the Republicans raid our bank accounts, but they aren't actively raising our taxes or destroying these programs the way Republicans have. And there's a new crop of Democrats that are trying to raise taxes on the wealthy and lower your taxes at the same time while restoring these programs. But the Republican Party has been actively working to create this reality that we find ourselves in right now. It is their core principle going back to the 1950s, and they really got started back in the 1980s to make things the way they are. They have been promising tax cuts for nearly 50 years and lying to you. The only reason Social Security recipients pay income tax on their Social Security income at all is because of Ronald Reagan. Why? These people already paid into the Social Security program. They gotta pay taxes on it again when they get out of what they already paid in. On the topic of taxes, we need to remake the government to work for the interests of working class people only, not for rich assholes who have never worked a day in their life. Okay, I gotta breathe. So what did we learn today, folks? Income tax is already skewed to favor the rich, and starting this year, it's gonna get worse. And politicians promising income tax reforms are actually fooling you into voting them in so they can screw you with higher taxes and a higher cost of living with lower pay. Social Security is not a Ponzi scheme. It's a program that we fund as working people, and we deserve to have it when we get older and there's a new crop of young working people able to pay into it. I deserve Social Security when I grow old because I am paying into the system to support older Americans who are living off Social Security right now, and I'm proud to do it. I'm not gonna bitch over the fact that $1 of my taxes goes out to pay somebody else. That's just how taxes fucking work, okay? Get used to it. $1 of my money is probably paying the salary of a kindergarten teacher out there who's teaching kids in a class that I'm obviously not sitting in right now. Some of my money was probably spent repairing a bridge in Milwaukee that I'll never drive over for my entire life, and I'm not gonna fucking cry about it. That's just the reality of taxes. So what else did we learn? We learned that when a CEO agrees to take a $1 annual salary, they're just trying to dodge paying payroll tax and income tax. They'll be given millions of dollars in preferred stock options, and they'll make money in the form of dividends that are paid out at a much lower tax rate, that capital gains tax rate I showed you earlier. Taking a $1 salary isn't virtuous, it's cowardly tax avoidance. We also learned that we need to lift the cap on payroll tax so high earners can actually pay into the program like the rest of us, and enact a new tax on people who only pay capital gains tax to make sure they pay into the system as well. If we were to lift the cap on payroll tax and create a minimum tax on billionaire wealth, we can fund Social Security until the end of time, and we can have so much money left over that we can make healthcare free for all Americans, and you can stop paying your health insurance, so there you go, there's more money in your pocket, and we can pay off all medical debt and all student loan debt too, and make public college tuition free all at the same time, and we'd still have money left over to fill potholes or whatever. This is not an exaggeration either. There is so much money out there in the hands of a few thousand wealthy billionaire dipshits who do not pay taxes the way you and I do. At best, they're done paying into Social Security just a few days into the year, and at worst, they don't pay into the system at all. Not a single penny. And if you consider the low capital gains tax that they pay and the enormous amount of deductions and credits they qualify for that you don't qualify for, well, they end up paying less than 5%, but working people on average have an effective tax rate of between 22 and 27%. Some of them pay nothing, no tax at all. No Social Security tax, no income tax, no capital gains tax, nothing. And on top of that, there's nearly $2 trillion with a T of unpaid taxes out there that the nation's wealthiest people and largest corporations already owe us. And the only reason they haven't paid it is because the Republicans have defunded and kneecapped the IRS. Now, Trump is forcing IRS agents to help ICE track down migrants who pay tens of billions of dollars into Social Security Security every year on behalf of billionaires who pay nothing. Social Security is a program that these migrants can never access. In a very real sense, undocumented immigrants pay more into Social Security than all of America's billionaires combined. There's another possible $8 trillion in tax money that can be recovered if they close existing loopholes. This is why IRS agents are being reassigned to ICE to protect billionaires from paying taxes that they already owe us. The 25 wealthiest people in the country only pay an average of 3.4% tax, and this is on hundreds of billions of dollars of wealth. This is egregious. The only reason that this is possible is because of nearly 50 years of anti-tax propaganda. They made you mad about taxes so they can cut their own taxes and raise yours. People say that the founding fathers fought a revolution because they didn't like taxes. Well, that's not true. They didn't like who the taxes went to. A bunch of wealthy dickheads who don't pay taxes themselves, and we found ourselves in the same exact situation again. It's time for a new revolution where we make the wealthy pay the taxes they owe, and our incomes will go up as a result of it. America's economy was at its strongest with a 90% top marginal tax rate. We can start by going back to that. Working people like you and I actually do pay taxes, even the wealthy ones. That's why famous actors, athletes, and musicians often find themselves in tax trouble, because they actually work for their money, which means they end up owing a lot in income taxes. But the losers who pay only capital gains tax, the ones who don't work a day in their entire lives, the heirs and heiresses who were born into a giant pile of money handed to them by their parents, they often pay nothing, and that needs to change. You want to make a change for the better and really make America great again? Learn to love taxes, because a more equitable tax code is a tool that we can leverage to exert control over the wealthy oligarchs that have stolen everything from us. Stop hating the IRS, because they are the ones who can recoup $2 trillion that the billionaires already owe to us, and possibly another $8 trillion on top of that. And that's not even mentioning the possibility if we eliminate the cap on Social Security tax. This is trillions of dollars that have been stolen from us that we need to get back. You can start by supporting political movements that push for a smarter, more equitable tax code, and you will have more money in your pocket. I promise you. So thank you for hearing me rant about this. Please hear me out. I am not lying to you like they are. The fear of taxes have left you with a higher tax bill and an empty bank account, and it's time to put that fear to bed. Okay. Thank you.